All right, let's jump right in. We are talking about something that impacts millions of us, but honestly gets ignored way too often: renter's insurance. You got to think of it as a financial safety net that, yeah, you hope you never ever have to use, but you will be so glad it's there if you do. Okay, so let's get right to the big one. I hear this all the time. Your landlord has insurance on the building, which means all your stuff is covered too, right?
Oh, that is a big no. And honestly, that's probably the single most dangerous and most expensive misconception you could have as a renter. Believing that little myth could literally cost you everything you own.
So let's just park here for a second, because if you get this one point, everything else we're about to talk about is going to make perfect sense. This is the foundation. Look at this. It draws a super clear line in the sand. Your landlord's policy, that protects their investment. The building, the walls, the roof, the pipes in the walls. Your renter's insurance protects your stuff, your laptop, your couch, your clothes, all of it. So let's say there's a kitchen fire. The landlord's insurance, it pays to fix the burnt cabinets and the wall. Your renter's insurance is what buys you a new kitchen table and replaces your smoked, damaged furniture. Without it, you are completely on your own. So now that we're crystal clear on what it isn't, let's dig into what renter's insurance actually is. You can think of a standard policy as having three main shields of protection. Each one is designed to guard you against a totally different kind of financial disaster. The first shield is the one most people think of: personal property coverage. This is the part that helps you replace all your belongings if they get stolen or, say, destroyed in a fire. We're talking everything from your bed to your books. But, and this is a big but, how you get paid back for that stuff all comes down to one really critical choice you have to make. And here is that choice. You've got actual cash value, or ACV, which gives you what your 5-year-old laptop is worth today, after 5 years of use. Not much, right? Then you have replacement cost value, or RCV. This gives you enough money to go out and buy a brand new similar laptop. Now, RCV does cost a little more each month, but for a real financial recovery after a disaster, it's almost always the way to go. All right, on to the second shield, and trust me, this one is huge. It's personal liability. Just imagine for a second, a friend is over, they trip on your rug, and they break their arm. Or maybe your bathtub overflows and the water leaks down, ruining your neighbor's ceiling. This coverage right here, it handles the medical bills, the repair costs, and even pays for your lawyer if you get sued. This shield protects your savings and your future from one single accident. And that brings us to the third shield: additional living expenses, or ALE. So remember that kitchen fire we talked about? Let's say it makes your apartment unlivable for a month while they do repairs. Where are you going to live? Well, ALE is what pays for the hotel. It covers the extra cost of eating out since you don't have a kitchen. It can even pay for a storage unit for your things that weren't damaged. Basically, it makes sure a disaster doesn't also leave you homeless. Okay, so we've got three really powerful shields of protection. I know what you're thinking. That's got to be expensive, right? Well, let's actually break down the real cost. So the price isn't one size fits all. It's really personalized to you. It's going to depend on things like where you live, of course. It also depends on how much coverage you actually want and the size of your deductible. That's just the amount you agree to pay yourself before the insurance money kicks in. Oh, and little things like just having a smoke detector, that can actually get you a discount. But here's the kicker. After all those things are factored in, for most people, the average premium for a really solid policy is just $15 to $30 a month. Seriously, that's it. And this chart just puts it all into perspective, doesn't it? For less than what you'd probably spend on one dinner out, just once a month, you can protect tens of thousands of dollars of your property and protect yourself from lawsuits that could wipe you out. When you look at it like this, it's kind of a no-brainer. Okay, so we've established it's essential, it's comprehensive, and it's surprisingly affordable. So the next question is pretty obvious. How do you actually go about getting the right policy for you? But first, a quick reality check. Just do a quick mental inventory of all your stuff. Your furniture, your computer, your TV, your clothes. What do you think it's all worth? Most people guess, I don't know, a few $1,000s. The reality? The average renter owns about $30,000 worth of possessions. Yeah, $30,000. And that number is exactly why this next part is so important. Don't worry, it's a pretty simple 3-step process. First, make an inventory. The easiest way? Just walk through your apartment with your phone and take a video of everything. It's the best possible proof of what you own. Second, based on that video, you can figure out how much coverage you actually need. And third, shop around. get quotes from a few different insurance companies. And hey, don't just automatically pick the cheapest one. You want to look for the best overall value for your money. So as we start to wrap this up, I really want to kind of reframe how we're thinking about this whole thing. This isn't just another bill you have to pay every month. It's really something much more fundamental to your financial health. I really love this idea from the source material. It says to view your policy not as a static purchase, but as an adaptable component of your overall financial security strategy. That's so powerful. It's not something you just buy and forget about. It's a living part of your financial plan, one that protects everything else you're working so hard for. It's not an expense. It's just smart risk management. Which really, it all comes down to one final thought. The question isn't, can I afford 15 or 20 bucks a month for renter's insurance? The real question, knowing everything that's at stake, is this: can you really afford not to have it?